Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. Now, Moody's rating says local banks face only moderate risk from rising household debt, unlike some of its Southeast Asian peers. The Bangko Sentral ng Pilipinas posts a five-fold increase in earnings driven by higher revenues and cost-cutting measures. Globe Telecom is considering Airtel Nigeria CEO Cruz to replace longtime President Ernest Cu. And Disney announces plans to reveal CEO Bob Iger's successor sometime from now by early 2026. First, a look at the financial markets. In Wall Street, the Dow Jones Industrial Average and the S&P 500 retreat from Friday's record high closes and from 6 straight weekly gains as Treasury yields rose and as investors, wary of high valuations, await earnings from major firms. The tech-heavy Nasdaq was the outlier, rising 0.3%.
Month or so, we've seen tech companies down 3%, with value beating growth by a decent amount, and then again small caps catching up to large cap stocks, which we had not seen for a very, very long period of time. So one of the things that's interesting, though, is that growth is still dominated, earnings growth is still dominated by large caps. So, and then now the expectations are that earnings will catch up. So just like price performance is caught up, we want to see the earnings growth catch up in these other areas as well.
Over in Europe, stocks also closed lower, with the DAX and CAC 40 both losing 1%. This as investors also await key corporate earnings as they continue to monitor the tensions in the Middle East. Meanwhile, over here in Asia, it's a new trading day. Asian markets are trading lower, trailing a mixed session on Wall Street. The Nikkei 225 is down 0.2%, the Kospi down by 0.8%. Meantime, the S&P and S&P ASX 200 over in Australia is down more than 8%. Over in the commodities market, after dropping over 7% last week, oil prices are nearly up by nearly 2%, trading above $74 a barrel. Gold, on the other hand, is down 11% after hitting record highs on strong demand. Now, local banks in the Philippines are facing only moderate risk from rising household debt compared to other Southeast Asian countries. Moody's reports that Filipino households have less debt and that a stable banking environment helps maintain asset quality. Whereas banks in countries like Thailand and Vietnam are more exposed because borrowers are more heavily in debt. This matters because it shows that despite growing loan demand, Philippine banks remain stable, boosting confidence in the economy, particularly with increasing financial access in rural areas. The Bangko Sentral ng Pilipinas reports a five-fold surge in earnings as of July, driven by higher revenues and lower expenses. The central bank's net income soared over 400%, reaching 95 billion pesos, up from 18.5 billion pesos last year. Revenues rose nearly 60% to about 191 billion pesos. Miscellaneous income, including trading gains and fees, jumped by 329% to 50 billion pesos, while the BSP reduced expenses by 8% to 126 billion pesos. This matters as it reflects stronger financial management and the BSP's growing ability to support the economy amid global uncertainties. The country's largest business group is pushing for more efforts to lower the cost of doing business, saying this is critical to attracting investors and promoting growth. The Philippine Chamber of Commerce and Industry says that while the ease of doing business law provides a mechanism for small businesses to combat red tape, more improvements are necessary. PCCI Vice President Raymond Jude Aguilar stresses that the high cost of electricity and logistics hurt our competitiveness. Addressing these key issues is important to making the Philippines more attractive to investors. The future of the Sangli Point International Airport project remains uncertain. Although the Philippine Competition Commission approved a joint venture between the Cavite government and the SPIA consortium, several requirements are still pending, including a detailed engineering design and environmental compliance certificate. This $11 billion project involving companies like Cavitex Holdings and Macro Asia is crucial for reducing airport congestion and boosting the Philippines' infrastructure growth. Now, The real estate market in Metro Manila, which has been oversupplied with condos for over 2 years, is finally seeing signs of improvement thanks to the rate cuts by the central bank. Sujin Kim has the details.
Market in Metro Manila hits a 29-month oversupply, marking the highest vacancy rate for residential spaces since the pandemic. But experts believe the property sector is on track for a recovery driven by consecutive rate cuts from the central bank, as well as expectations of further policy easing.
Mas murang humiram para mag-create ng bago supply. No? Maring may correction ngayon, gawa nga na sa ibang sector yung iiwanan ng pogo. No? Hintayin nila na lalong bumaba yung financing costs bago sila mag-locking.
Of the unsold condominium units across Metro Manila, 18,000 are in Quezon City.
I think that's not something that's QC specific. No, you have a confluence of things. A lot of developers this is based on our understanding. We're developing initially. A lot of them had started before the pandemic. When you develop and enter a project, it's a multi-year. These projects aren't built overnight. No, so you have that. You still have the effects of the pandemic. Now you have the effects of the ban in Pogo, which of course results in a lot of workers that would have been buyers leaving. So a lot of the buyers or even renters are a combination of you need workers or people with income, and like it or not, the Pogos did bring a lot of people in, and so there are benefits. While there are definitely negatives to it, there were benefits in terms of property, and the developers continue to develop without realizing or expecting that would happen. So when that happened, now you have an excess.
But in the office sector, companies are expected to relocate or expand to Quezon City from more expensive business districts such as Makati and Bonifacio Global City.
The city is promoting green initiatives as one. No? It's a lot of green initiatives. So and a lot of building public open spaces, but we're in the process of doing. And of course, you have your active transport promotion, bike lanes, your attempts to pedestrianize.
Interest in Quezon City is also boosted by key infrastructure projects such as the construction of MRT-7, the Bulacan Airport, and the North Bus Terminal. Quezon City currently offers 3.1 million square meters of office space. Sujin Kim, BNC.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Hi, Joey. Can you hear me?
I can hear you.
Okay, great. Okay.
And receive the strength from God's Word. Join Cardinal Luis Antonio Tagle as he shares the reflection we need for the rest of the week.
We pray that the Word of God would find fulfillment in your life and His blessings be always upon you.
Every Sunday, 7 a.m. with replays at 3 p.m.
Welcome back to Basis Points. Globe Telecom, led by billionaire Jaime Augusto Zobel de Ayala, is setting its sights on an external candidate to take over as president and CEO, replacing longtime chief Ernest Cu. Airtel, Nigeria's former managing director, Cruz, is the leading contender to head the country's largest telco as Cu retires after 15 years. Cruz brings a wealth of experience, having spent over 30 years at Unilever before joining the telecom industry. His leadership will be critical as Globe moves beyond telecommunications, expanding into fintech, e-commerce, healthcare, and more. Now, trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Right now, the market has been trading range-bound, moving between 7,400 and 7,500. Today is no different. PSE index is up by 0.4% to 74.32. That's 74.32. All shares index up as well, up by 0.25% to 40.90. Now, analysts say the PSE index may rise this week on bargain hunting as investors position ahead of more rate cuts by the Bangko Sentral in anticipation of upbeat Q3 earnings, and also as corporate guidance comes in for 2025 on the earnings and on the capital expenditure front. That's seen to support the market. Now, back to the index. We're seeing buying in the financials, industrials, holding firms, services, and mining and oil counters. Pretty much all the other counters, except for the property counter, it's down, but down marginally, down by just 0.1%. Now, the foreign exchange market, the peso opens weaker. Opens at 57.69, weaker from its previous close of 57.59 against the greenback. Now, to help us make sense of these numbers, we're now joined by the president of Eagle Equities, Joey Ras. Good morning, Joey. Thank you for being here with us.
Good morning, Maiki. It's an honor to be with you on one of your early broadcasts.
Well, we're happy to have you and to get your insights on the market. Okay, Joey, as we head into Q3 earnings season, what is your outlook for the equities market?
Well, we're in this year is going to be a good year for most of the listed companies. I think up to Q2, everybody, almost all have been up in double-digit figures. So I see no difference for Q3 and Q4.
Yeah, leading that, ushering in the good results for the third quarter was BPI. We saw the benefits of the high interest rate environment for them. BPI opened Q3 season with very strong numbers, recording a net income of 48 billion for the first 9 months of 2024, up 24% year on year. Do you expect to see this positive momentum across the banking sector? Or are there specific risks that could affect the outlook for particular banks?
Yeah, well, up to Q2 at least, most of the banks have reported quite good figures, mostly in line with the BPI. Even some of the laggards that were not doing too well last year are doing much better already up to Q2. So I guess actually the high interest rate environment may be helping them a lot because they don't have to work so much, just keep their money in notes and bills and and bonds and make the interest, right? And
That's
at the same time, blend out so much and keep the interest that you pay to depositors low.
The banks were sitting pretty during the high interest rate environment, but the tides have changed. They've changed fast, and they've changed in big ways. Beginning in August, we've seen a 50 basis points shaved off. In the U.S., they had a supersized rate cut as well. Where does this leave us now, and how does that affect our future trajectory? Will banks be as profitable in this sort of lower interest rate environment, Joey?
Well, they have to balance, no? Now that interest rates are lower, more people will be able to afford loans, but they have to balance the risk. The risk of lending to that entity or that person. So hopefully, there are no more problems with the economy. Of course, there could always be some that come up, no? Weather for the agricultural economy, weather is always a problem. And every year, harvest season is September to November. And when are the biggest and strongest typhoons? September to November.
Yeah.
That's why there's a problem every year with harvest, with rice, no? And that's why we always end up on the importing side rather than the exporting side.
Yeah, there are also geopolitical risks, but all of those things are just not within our control. Taking a look at the market has been largely range bound, trading between 74 to 7,500. It's been consolidating at this level. Why is it that we haven't seen much movement, Joey? Why do you think that is? Is it a lot because of we need more direction from the U.S. Federal Reserve? Elections in the U.S. are coming up. How do all these factors weigh on investor sentiment?
The market has done pretty well over the last 2 months, and then when we hit October, when the American statistics were released, and it showed that the economy was not as bad as everybody thought it was, and that the Fed may not lower rates as fast or as quickly or as big in percentage points as expected, then the market decided, hey, we better put on the brakes first. We might be overdoing it already. We might be expecting too much of an easing or too fast of an easing cycle as we initially thought. So that's why there are some people, some funds, some investors already taking profits first from that quick run up over the last 2 months, and that's why October is just in consolidation. Actually, we're not too bad because usually October is a down month, as in down big. Most of the market crashes have happened in October. So actually we're through the dangerous portion. The end of October is usually a good time to buy already for the run up to January.
Seasonally, is it also might we also see an uptick in inflation in these latter couple of months, given that this is when the spending kicks in?
Yeah, November, December are usually months. Well, actually, every month the inflation rate goes up. No? It just depends on how large is the increase.
Okay.
The problem this year is that what brought down inflation last figure in September was transport, and probably connected with the fuel prices. Now, since the dollar has moved up because of the expectations that we probably will not have a big cut anymore in American interest rates, and at the same time the BSP cut local interest rates, so the peso has depreciated, no, from 55 back to almost 58. You expect your fuel prices to go up in the next, well, they already started the last 2 weeks, and they will probably go up more. There's also tension in the Middle East, no? So with that reversal in fuel prices, I expect the inflation to move back up in November and December.
To inch up a bit as it seasonally does. Okay, Joey, we're a little short on time. One question before I let you go. With inflation, going up a bit as it seasonally does during this time of the year, do you think the BSP is going to cut interest rates in December when the Monetary Board meets again?
I think they will cut some more, another 25. Business is really crying for lower interest rates. So I think to keep the economy going, they have to cut them.
Okay. Well, I hope banks start lending a lot, because that's going to be expansionary for all the sectors on the index and more. All right, Joey Ras, thank you so much for your time. The president.
Thank you.
Yeah, the president of Eagle Equities. Now we're taking a quick breather. Basis Points will be right back. Welcome back to Basis Points. The government is pushing ahead with renewable energy projects despite terminating several underperforming contracts. Energy Assistant Secretary Maylene Capongol says that the DOE is committed to making sure only serious developers follow through. More than 100 contracts will be terminated due to issues like failure to secure land or grid connections. These projects will then be opened to more qualified players in a competitive selection process. This move matters because it keeps the country on track to meet its clean energy goals while making room for more competent developers. Now, elsewhere in the world, the competition in artificial intelligence space is intensifying as the United States prepares to target China with new restrictions. Washington is finalizing rules to ban certain U.S. investments in China's AI sector. The rules will also require American investors to inform the Treasury Department about investments in sensitive technologies such as artificial intelligence. The move, expected soon, is part of national security efforts to limit Beijing's access to technologies that could strengthen its military. This could shake up both Silicon Valley and China's tech markets. On another front, Disney's search for a new CEO is officially underway, with a successor to Bob Iger expected by early 2026. After 15 years with the company, Iger originally retired in 2020. However, his successor, Bob Chapek, was removed in 2022, extending Iger's leadership 5 times. Iger, who led Disney's expansion through major acquisitions including Pixar, Marvel, and Star Wars, is expected to step down for good. This transition could be crucial for Disney's future as it navigates a changing media landscape. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.